Good morning. Welcome to Market Day Report. I'm Tony St. James. All right, we get the week started, and I'll put an asterisk in front of that because we only trade today, and then light trade tomorrow. We'll be off Wednesday for Christmas Day, and then try to restart trade on Thursday and Friday. It will definitely be an interesting trading week. And then we'll go ahead and repeat that next week for New Year's. But anyway, we've got a full day of trade today, and let's jump into the markets. Overnight action. March corn, penny and 3/4 higher at $4.48 a bushel. Look at the December. That's next year's new crop, not this December, but December 2025. It's up 3/4 cent at 438.5. Soybean trade, soybeans down nearly 25% year to date. Front month at 9.72 1/4. It's down 2 1/4 cents. Soy meal contracts in the overnight session were lower, and soy oil contracts, well, turning it around, moving higher in the overnight session. What about the wheat market? We'll start Chicago first with July 5.51 3/4, penny and a half higher. For hard red, July contract up 3 3/4 cents at 5.64.5, and the March spring wheat contract 4 1/4 higher, 5.94.5. Notice all the other contracts with sixes in front of them. And speaking of sixes, that's where we find the March contract for cotton. This is old crop 69.40, up 134 points. Next year's new crop 70.56, up 128. Brian Hoops is president, Midwest Market Solutions. Brian, we also had flash sales overnight. That's positive, right?
It certainly is. Good morning, Tony, and hope you had a great weekend, as well as everyone else out there. 132,000 corn sold to an unknown destination, 132,000 beans sold to China this morning, so certainly not anything there that we're disappointed about. It's a positive private export sales, and the fact that it was to China, I think probably tells us they're still concerned or still has concerns about South American weather and production. Now, it looks really good as far as the forecast goes for Brazil. Argentina is getting a little bit dry, and we've been talking for a couple of weeks now. Watch that soybean meal market. If the market becomes concerned about dryness in Argentina, meal will be the one that takes off and rallies and leads things higher. And look at last week, big outside bullish reversal in meal off of contract lows that we put in early in the week. By the end of the week, we had taken out the previous week's highs and closed stronger. And we gave some strength in the overnight trade because of that, so that technical buying. But we did, by the end of the day or into the night session, did give a little bit of that back in both soybeans and soybean meal. Gave back some of those gains and closed just slightly lower. Rains were better than expected over the weekend in Argentina, but the forecast still a little bit dry. So I don't know that we're going to see any type of a big sell-off in soybeans based off of this forecast. There's still some dry weather ahead of us, but there is no real heat that's going to really curtail yield. So that's the positive thing here, I think. Really not going to see much in the way of damaging to that yield potential. But it's enough here with the holidays, with the volume really diminishing this week. We might see quite a bit of trade activity this morning or even today, but by tomorrow we have a noon close in the grains and the livestock. Would expect things to really quiet down and really slow down in the grains and the livestock going forward here for the rest of the week. You have the Christmas, you have a couple days after that, and then I think a lot of people just want to take more time off, take an extended weekend or extended week here with the Christmas holiday and an excuse going into the weekend, just take a lot of time off.
Yeah, good point there, Brian. Hang on. We'll come back and we'll talk livestock futures and a recap of a cattle on feed report. That's next. Market Day Report continues after this. So a cattle on feed report out over the weekend. It was after the market closed on Friday. So, yeah, for all intents and purposes, it was for the weekend. The on-feed number, 99.7%, placements at 96.3%, and I had the marketings at 98.5%. What about cash cattle? Well, 191 to 192 in the south. Light trade developed on that. 195 in the north. We saw some 196, 197, and 305 to 308 on the Dressed. All right, I think we've got all of that out of the way. How did the market close on Friday before all of this news? December at 191.32, up 97. The deferreds were all $1.50 higher. For the feeders, $1.12 higher. Front month January, 255.60. Again, big gains on the rest of the contracts. And then the hog market, and we get a hog report coming out this afternoon from USDA. February up 230, 85.92. Brian Hoops, Midwest Market Solutions. Brian, were you surprised by anything in that cattle on feed?
I don't think there was really any major surprises. You know, the placement number, there's at least 3 different surveys out there for that placement number. So compared to one of them, I think it was the Reuters number, it came in a little bit above their estimate, but Dow Jones and the Bloomberg numbers, it was below their numbers. But it was a 9-year low. That's what I'm focused on this morning. Is maybe we open a little softer if it's a little bit disappointing to some people this morning. But I'm focused on it's a 9-year low, and that should attract some buying interest in some of those deferred contracts. So February, mostly April, maybe even June should be a benefit of that by the end of the trading session. We kind of conclude the annual reports this afternoon. We have cold storage, we have hog and pig report this afternoon, both at the same time. Then after that, I think a lot of the trade just going to kind of cash in their chips for the year and maybe do some positioning tomorrow morning, then just kind of move on and close the books out. Cash is called steady, maybe a little bit better this week. You know, Packers have holiday short and kill weeks this week and next week. Their margins are really suffering, so we're hoping that the boxes can move higher with these kill weeks being short in the next 2 weeks. It has to prop up those boxes, regain some of those lost margins for those Packers. They're about $70 in the red right now. So we want to restore that so we can see higher cash trade later on in January and into February.
Well, Brian, thanks for popping in today. Merry Christmas, and we'll see you soon. Again, Brian Hoops with Midwest Market Solutions.